Our base case is in the $600,000 range. Our bull case, and we think the probability of the bull case has increased with this SEC approval. This is a green light. Our bull case is $1.5 million by 2030. You can see the building blocks. You can see how conservative we are in terms of those building blocks. This is a big idea. It is the first global, decentralized, digital, rules-based, critical there, rules-based monetary system in history. It is a very big idea. Yes, well, at 21, and that has significance, our partner is 21 shares, and of course, the number of Bitcoin that will ever be minted will not go past 21 million. So some significance there. We are not looking to maximize profit on this spot Bitcoin ETF. We are looking at Bitcoin as a public good. It is essentially, from a technology point of view, going to be the financial superhighway of the internet. This is this blockchain, Bitcoin blockchain technology is what the developers did not build into the internet in the early days, in the early 90s. Why? Because no one ever dreamed that commerce or financial services would take place on this network. Now, finally, we're going to have a native currency in the internet, and it will take out a lot of middlemen because it is a peer-to-peer network. So we want to give investors as much access and exposure to Bitcoin. We don't want fees to get in the way. And of course, ETFs are extremely accessible. So we're pretty excited to be part of the ecosystem and offering a spot Bitcoin ETF. Well, you'll see that we did, even before today, we scaled out of GBTC as the discount narrowed so dramatically into ProShares Bitcoin futures. So let's say as a first stop, I can't talk about what we are doing or are going to do in the future, but logic would suggest that we'd be making another move at some point. So that we will not lose exposure to Bitcoin. We're probably more excited about the possibility of price appreciation now that despite the controversy, the SEC has given a spot Bitcoin ETF the green light. I think finally institutions will feel more comfortable stepping in. And what's so interesting right now is that already outstanding, there are, I think it's 19.6 million Bitcoin. There will never be any more than 21 million. 15 million of that 19.6 are in what we call strong hands. Their wallets have not moved Bitcoin in 155 days or more. That's 75% of the outstanding. So now we believe there's going to become, as institutions enter, real scarcity value. And each dollar moving in will have more of an outsized impact now than it did before we got the green light. I think it's a terrible decision. I think it's a strategic blunder. And what Vanguard is doing is basically saying, the world's not going to change. These new financial rails are not going to be successful. We're still going to have 7 middlemen between merchants and consumers, each one taking a toll. And we just don't think that's going to prove correct. Truth always wins out. Innovation solves problems. There's a lot of friction in the financial system. And we believe that Bitcoin, blockchain technology generally are going to take a lot of the friction out of the system. The other reason I think this is a terrible mistake is, they're going to deprive the investors who stay with them of really the first global, decentralized, private, no government oversight, rules-based, critical phrase there, monetary policy, monetary system in history. My mentor, Art Laffer, you may know him from the Laffer curve. He's also a monetary scholar. He said, "This is what I have been waiting for for 50 years since they closed the gold window in 1971. He is so excited about this new asset class. And that is the other mistake I think that Vanguard is making. It's depriving its clients of access to a new asset class. And what do we know about new asset classes? Well, if it's truly non-correlated or exhibits very low correlation of returns to other assets, then what a diversification into this new asset class will enable is increased return per unit of risk. That I think that advisors have a fiduciary responsibility to look at this new asset class. And to the extent they're working with Vanguard, they will be prohibited. So again, I think it's a strategic blunder. But again, we're all about disruptive innovation. That's all we do. Right. This is the most profound disruptive innovation taking place in the world today. The biggest risk we were running was our regulators chasing innovation from American shores. And so that was the biggest risk we were concerned about. I think after 2022 and all the crises we saw back then, including the bankruptcy and unwinding an ultimate bankruptcy of FTX, that actually proved the case for Bitcoin. You know, it was interesting. Sam Bankman-Fried did not like Bitcoin. Why didn't he like it? Well, it's a completely decentralized network. It's completely transparent. You can watch wallets move Bitcoin from one address to the other. And you look at FTX, it was completely centralized, completely opaque, and it turns out completely fraudulent. So I think in terms of the risks to Bitcoin, the regulators have been so staunchly opposed, mostly Gary Gensler, I would submit, but there is another regulator opposed, that I think we have studied and done as much due diligence about the health of this network. That's why we put out a Bitcoin monthly, that it would be very difficult to perpetrate fraud in the base layer of Bitcoin. Any of the hacks you've heard about are on applications built on top of the base layer, and those are software errors that enable the hackers in. But the base layer, which is the monetary system after all, has not been hacked. So I think that the regulators, while it was very frustrating, and while the courts had to make some rulings in here, the regulatory resistance, I think, has hard-coded, if for want of a better word, the security and safety of the network. Our base case is in the $600,000 range. Our bull case, and we think the probability of the bull case has increased with this SEC approval. This is a green light. Our bull case is $1.5 million by 2030. You can see the building blocks. You can see how conservative we are in terms of those building blocks. This is a big idea. It is the first global, decentralized, digital, rules-based, critical there, rules-based monetary system in history. It is a very big idea. Our first paper on this was in 2015. The white paper is still on our site. And we tried to figure out, could Bitcoin serve the three roles of money? Store of value, as you say, most people agree with that one. Means of exchange, unit of account. And the answer to that was yes. We put out a Bitcoin brainstorm with our partner Bitcoin Park in Nashville. And it examines the convergence of artificial intelligence and Bitcoin. And you'll hear his nickname's Roast Beef on that podcast talk about that convergence and how it's going to redefine the division of labor. It's probably going to put the gig economy on steroids. And it's starting already in the emerging markets, in Africa in particular. So it's very exciting. I don't think people understand how hard at work the developers around the world have been. Lightning Network is a big part of leveraging the base layer Bitcoin. So we're very excited. We're so happy that ARKB is going to be part of the ecosystem.